From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. A little bit of trepidation in these markets today. Of course, we're awaiting the key inflation data out of the US. We did see another day of selling the CBO 200 there, down by around 0.6% as we finish out the session. A bit of movement in terms of some weakness in utilities, but really when we look at the themes of the day today, it was about that tech tumble. That was one of the worst performing sectors of the day. Of course, a lot of concern about whether or not there's going to be another tech war between the US and China as well. And we saw the likes of WiseTech down 2.5%, Xero off by about 2%. Also, coffee crisis. I mean, we all know it costs quite a lot for what Americans like to call a cup of joe, or what we like to call a flat white. But we have seen the blistering rally in coffee prices reaching fever pitch because there's, of course, this really bad weather in Brazil, which is wreaking havoc on next year's crop. So Arabica futures leaping as high as $5.45 a pound. That's $3.48. And that's the highest level in data going back to 1972 and surpassing the previous all-time hike set in 1977. So this has been one of the hottest commodities of the year. Arabica coffee is up more than 80% so far this year, and it is the main type of coffee consumed in Australia. So watch out, we could be paying more soon for coffee. And of course, in terms of inflation and prices going higher, we are on key watch for that inflation data coming out of the US, which will give us an indication as to how the Fed is going to move at its meeting next week. Still expecting another 25 basis point cut from the Fed. Let's have a look again at the market and some of those sectors. I mentioned tech stocks coming under pressure today. WiseTech finishing the session off almost 3%, Xero down 1.6%. And Zip off by around 1%. Some weakness too in energy players. We did see global oil prices coming under a little bit of pressure during the Asian session. We're watching, of course, tight supply potentially in Europe this coming winter and the impact of the overthrow of Syria's president. One sector moving higher today was the REITs. So some good moves coming through there. Goodman Group, we just heard Marcus Bogdan talk about that with Nadine. It was up by 1.4% today. Getting into some of the corporate stories, South 32 coming under pressure. It said that the escalating civil unrest in Mozambique will have an impact on the transport of raw materials to Mosul Aluminum, its aluminium production facility in the country. We saw SETA coming under pressure as well. A block trade of around 16 million changing hands at $1.10 a share. Shares in the online luxury retailer, of course, falling following that block trade going through at a discount. Sigma Health off by about 0.5%. It does say that the documentation required by shareholders for voting on the proposed merger with Chemist Warehouse will be released this calendar year, meaning that Chemist Warehouse could be hitting the ASX as early as February. All right, let's talk about all the market action and welcome to the COB, Julia Lee from FTSE Russell. Always good to see you, Julia. I guess it's just a little bit of a pullback as we await this inflation data out of the US.
Juliet, if we have a look at the market today, we did see red across most sectors of the market, the one exception being the property space, which was in the black, and it looks like the discretionary sector also might just finish in the black today. But all up, we're inside of the end of the year, and it's been another good year for the Australian share market. We're up by around about 10%, but it doesn't tell the whole story, because if we have a look across different sectors, performances are so wildly different. In fact, if we have a look at the tech space, up by a huge 50% on the Australian share market, whereas if we have a look at energy, actually down by 20%. So what sectors you've been exposed to has been very important this year. The other thing we've been watching is just in terms of size. It's been another year where the mega caps and the large caps have once again outperformed, and that's the case whether we look at here in Australia or whether we look at the US or global trends. We have a look at the US, the Russell 1000, which is the large cap index, is up up by about 26%. But the Russell 2000, which includes the small caps, up by 17%. So you're seeing around about a 9% difference there in terms of performance. And here in Australia, if we have a look at the small odds, up by around about 8%. But if we have a look at the ASX 50, up by around about 10%. So once again, we're seeing those large caps very much in favor. So as we round up the year, it's been another year where tech has outperformed, the US has outperformed, and we've seen that continued trend of the large cap companies outperforming.
Julia, another factor that we've been really watching is the China sensitive stocks, and we got a bit of a boost yesterday on that stimulus. But you've been looking at China ETFs as well, despite the lackluster move in the economy. What are you seeing there?
Yeah, I think this is one of the most interesting things about investing, where you can see, the economic performance hasn't been great, but investors really look to see what's priced in and then look to see what the outlook is over the next 2 to 3 years. So I think the key for investors has the worst case scenario already been priced in terms of China? And then is there the possibility that we start to see an upgrade in the outlook as stimulus comes along? We see a turning in terms of the property space and the economy in China. So while the economy hasn't been doing so great in China, if we have a look at the China ETFs and the China major indexes, they've been performing very well. So if we have a look at the iShares China 50 ETF, IZZ, that's actually up a huge 44% in the year to date so far. Of course, there's lots of things to be watching with China at the moment. And I guess one of the things that really favored investors at the beginning of the year was that we were seeing valuation for Chinese equities at a 25-year low. So valuations being that low meant that the market was way too pessimistic. But looking forward, there's two things that investors should keep in mind. One is, of course, the GDP target of 5%. And secondly, the tariff situation. So the market's still hoping for a fair amount of stimulus. Of course, the comments this week certainly helping, where it looks like the China rhetoric seems to center more now in terms of growth, and hopefully that's a positive for investors in 2025.
Now, of course, the other key focus, Julia, is the inflation data coming out of the US tonight. What are you expecting as we look ahead to the Fed potentially cutting again next week?
Well, I think after the RBA meeting yesterday, most homeowners are going to be fixated on interest rates. And a lot of those interest rate expectations stem from the US. And so US inflation is extremely important. We'll get a gauge of that tonight. And core inflation is expected to have risen 0.3% month on month. So that would take the inflation number up to 3.3%. We have a look at what the polls are saying. The Reuters poll has 90% of economists still betting that we will see a 25 basis point cut in US rates for December, but then most of those economists are predicting that the US will stay on hold in January. So these inflation numbers will be pivotal for that outlook. And then, of course, here domestically, we'll get employment numbers as well. So those job numbers are very important for the Australian interest rate outlook. And tomorrow it's expected that those November numbers will show 25,000 new jobs having been added, but the unemployment rate ticking up to 4.2% as more people participate in the workforce. So still the Australian jobs market looking relatively strong going into Christmas, and waiting on those numbers to get an idea around interest rates. At the moment, there seems to be a move towards a greater probability that we might just see a 25 basis point cut here in Australia in February.
Okay, well, that really puts to how do we sort of make money in 2025, Julia? I know we're going to ask you this on our last call next week, but give us a little bit of a sneak peek of some of the themes for next year.
Yeah, I think this is a time of year where we kind of evaluate what's happened in markets and what might happen next year and how to allocate our assets for 2025. I guess the good news is that it has been a good time for investors, and I think people get fearful when they see these strong type of returns on whether they can continue. And we have seen once again strength in terms of the US markets, where we've seen 20% plus performances coming through. The good news is that on the earnings side, fundamentals still remain relatively strong. We're still expecting to see relatively good earnings growth coming through. So that US-centric story should still be well supported, as well as that stronger US currency. But of course, looking to see whether we see a broadening out of this rally. And of course, as we see this risk rally move on, usually what we do see is the small caps starting to outperform the large caps. We've slowly started to see that over the last 52 weeks, but expecting to see a bit more of a broadening out of the rally. So size might be something that investors could look for. And of course, as investors start to take more risks, they start to look at things like emerging markets. I think India is a place where we are seeing continued increase in investment as well as consumption, a relatively steady inflation over there. So I think that could be an interesting one to watch. But this year has been a good one for investors. Hopefully we'll see more of the same in 2025.
Let's hope. All right, Julia, catch you in person soon. Thanks so much, Julia Lee from FTSE Russell there. Well, the stock of the day today was Integral Diagnostics. We heard from Andrew Weiland from DP Wealth Advisory and Henry Jennings from Marcus Today.
Trading quite low on a PE basis relative to their peers. Peers are trading at sort of in that healthcare space at around 30, 35 times earnings. PE forecast to be around 20 times. So it's trading well under, and yet the forecast earnings per share growth by virtue of having these two businesses together is around 30%. So in other words, you've got a company that's reasonably cheap, but whenever there's mergers, acquisitions, it takes 12 to 18 months for the cost efficiencies to wash through, the merging of those cultures and all that type of thing. So on balance, it's a hold, but if they can drive through those cost efficiencies and certainly get the moulding of that culture together by virtue of some of those numbers we were talking about, it looks like an interesting business. It's probably just a bit too soon yet.
At the end of the day, I think this is one of the businesses that's going to be really impacted, I guess, by AI. And we're already seeing that, I guess, and that's going to help the efficiencies. So I'm with Andrew with these two in terms of a hold for them or it as it becomes. I think it delists just before Christmas, so you will just have the one stock to contend with.
And of course, it was Integral Diagnostics, the stock of the day there. Henry and Andrew getting very much into the Christmas spirit. Let's have a look at the market leaders today. Star Entertainment doing very well. Remember, it has had a horror year, up 5.5% today to 19 cents. Eagers Automotive also looking good, along with Coronado Global Resources, Neuron Pharmaceuticals and Sayona Mining. To the downside today, we saw South 32. We talked about flagging some concerns about its Mozambique plant. IPH, Champion Iron, Computershare and Cleanaway also under pressure. Looking at the small end of town, I think we might see a couple of double ups there. No, we're getting Brockman Mining, the laggard, down 14%. Pengana Private also under pressure. And to the downside, they were up, sorry. The downside today in the small end of town are these stocks. Paradigm is down 13%. Vinyl is down 8.3%. And Serco, which I think was potentially holding an AGM today, down by 7%. All right, well, of course, we know that we are looking out for the CPI print in the US tonight for November, final piece of the puzzle in terms of what we see from the Fed. When you look at market pricing, there is still the probability of a 86.1% probability chance of a quarter point cut from the Fed next week, according to the CME's Fed Watch metric. We're also getting the Bank of Canada interest rate decision as well. Tomorrow locally, very key jobs data coming through. Of course, another piece in the puzzle for the RBA's decision in February. We did have that dovish tilt coming through from Michelle Bullock & Co yesterday. CommBank household spending insights too. We'll hear from the RBA Assistant Governor Brad Jones, and we get population growth for the June quarter. Had a great conversation earlier today about the impact of population on the overall economy, which of course is one of those things that we have been talking about quite often, and the fact that had we not had so much immigration, we could actually be in a depression scenario. And that was Charlie Callan from Bond Advisor, so you can have a listen to that. He was also talking about the APRA announcement. He said the economy is very grim without immigration and government spending. All right, let's have a quick look at where the market has finished the day's session. Down 0.6% there on the CBO 200. The ASX 200 closing lower by 40 points or 0.5% to 8,353 across crossing below its 20-day moving average. South 32 and IPH, the worst performers, and of course we mentioned the weakness coming through in tech, industrials, utilities, energy. A-REITs looking like they were the only good performing stock today, with potentially a little bit of upside in the retailers as well. All right, that does it for the COB today. We'll be back, of course, bright and early from 9:45 Eastern tomorrow with that wrap up of what we saw in the US inflation print. Have a great evening.